Hello, my name is Patrick Gowing from the Dairy KT team, and in this short video we just want to take you through a worked example of using the break-even point calculator. To start with, we include all cash receipts, so that's all the money that came into the farm during the year. We then deduct all cash payments, which is all the costs associated with running the farm business. This will give us our net farm cash for the farm during the year. We then start deducting other cash flows from the farm. In this example, there was 55,000 worth of drawings, so that's the amount of money the farm took out to pay into the household. There was 8,000 worth of tax. He took no money from the farm for any capital reinvestment, so there was no money taken out of cash flow for capital reinvestment during the year, and his repayments for the farm were 14,500. This gives us the net cash flow, so it's the amount of cash that the farm generated surplus. Next step we do is input the total number of litres supplied to the farm during the year. And this is the figure supplied to the co-op rather than produced, so it's only the milk that you actually sent to the co-op. We then include the average protein for the year and the average fat. This gives us the net cash flow equivalence. So this is the amount of the surplus cash divided by your total litres, which gives your net cash flow in cent per litre equivalence. We then need to input the average milk price received for the co-op during the year. And in this case was 32 cents a litre. This gives us the farmer break even. So this is the price the farmer needs to get from the co-op to get to cover all costs. And when we take away the value of his fat and protein above the base, it gives the base price the farmer needs to achieve to get to break even. And in this scenario, it's 22.01 cents a litre. So for every farm, we just have to fill in the blue boxes, and we'll derive the co-op break-even point for that farm. Anything that changes in the blue will affect your co-op break-even. For example, if we drop the protein and drop the fat, this increases his co-op break-even as his milk is not worth as much, and it brings it closer to the farmer and the co-op break-even. If, for example, there had been money taken out of cash flow to do a capital reinvestment in the year, it will also increase the co-op break-even. So this calculator can be used in any year. And it's a very important thing to do to see where you are. The only thing that has to be changed is, from year to year, is the value of the fat and protein which you can get from your co-op milk statements. And for this example, it's set up at a base price for last year at 31.01 cents per litre.